Good evening, everybody. I would like to say thank you so much for joining me on my first ever YouTube live. I can't lie, I've been sitting here and getting quite nervous. The thought of going live and the potential mistakes that could be made has made me a little bit nervous over the last 15 minutes. So if you can hear me, if you can just leave a comment in the comments box so I know that my mic is turned on and you can see me and hear me, that'd be awesome. But yeah, so just to let you know, if for anyone that's logging on and maybe isn't going to be able to stay for the whole video or live, this is going to be available afterwards on my channel. Thanks Richard for saying it's all good, and thanks for joining as well, mate. So yeah, the video is going to be available afterwards on my channel, so you can watch back if you can't spend your Sunday evening looking at this face. I don't blame you, to be honest with you. Thanks Katie, and hi Jamie, it's kind of you to log in, mate. It's and I'm glad you can hear me okay. So for any of you that don't know who I am, my name is Gary. I run a channel called Free Your Finance. I talk about investing, property and financial independence. They're the three main things that I speak about. I've been working towards financial independence without knowing that I was working towards it for about 12 years. This was predominantly through buy-to-let properties, and I stumbled upon the financial independence movement around a year ago, and I realised that I'm actually almost at FIRE. So for any of you that don't know, that's Financial Independence Retire Early, and I really was so pleased to find this movement because it's given me a figure to work towards and know where I'm at in my investing journey. Now, I'm not going to go into too much detail, but I'm not really pursuing FIRE. I love my job, and the plan is to have security so that I can do what I want and when I want. But all of that is being said in various videos. I won't blabber on too much. Glenn, thanks for logging in, mate. I appreciate your support, and thanks again for doing the interview on the channel a while back. For anyone that hasn't seen that, please go and check it out. So anyway, I need to stop going on. So I've made a few notes, which I know is cheating, but I would like to first of all thank you all for logging on and watching. I've been creating content now for 8 months, and I can't believe I'm at almost 1,500 subscribers. I can't believe I've got people logged on tonight listening to me, which is incredible. So just thank you so much. My idea was always to create a community. I know that sort of reaching financial independence and investing can be quite lonely. So my plan was to create a community where we can all come together and discuss different things and our methods. And that's a great thing about finance. We all do it differently. We've all got different opinions. So if you have any questions that you would like to ask, leave them in the comments box. They can be about my buy-to-let properties. I self-manage my buy-to-let properties, so it could be about that. It could be about the investing I do. It could be about my journey towards FI, or it could be a question about me. Whatever you want to ask, leave them in the comments box, and I'll do my best to answer them. See what you can do. Finally, the thing I must say before I get started is I'm not a financial advisor. I am purely a guy that is logged on YouTube talking to you about my journey. So it's not financial advice. So I'm not going to be recommending funds. I'm not going to be telling you what to do with your money. Obviously, do your own research, and make sure that you do something that suits your needs, because your needs may be very different to mine. So thanks, Ewan. Cheers so much for logging in, mate, and thank you for also doing an interview on my channel. Aidan, very kind of you to log in as well, sir. I really appreciate it. So yeah, we've got all that out of the way. So to give you a little bit of an idea how tonight's going to run, I am using a software which creates problems because I've got more tech to look after while talking to you. But hopefully it's going to show the questions that I've been asked to go through on here before I get any potentially in the chat. Obviously, I may not even get any questions in the chat anyway. So I'm going to work through the questions that I've been asked already to answer tonight. And don't forget, if you want to ask anything else, just leave it in the comments box. So hopefully, can you guys see that question on the screen? I hope so. So Dinka Daniel, first question was, do I invest in crypto? So that has been the big news recently, hasn't it? All of this about Bitcoin especially. The answer is yes, I do invest in crypto. I hold some Bitcoin. I've held the Bitcoin for about 2 years. And last time I looked, it's about 650% up, which is unreal, isn't it? I only hold a small amount of Bitcoin. It's not one of my main investments, but it was a bit of play money, basically. It was something that I wanted to have a little bit of money in and see how I could do with it. It's not something I'll be putting my life savings into, But to answer your question, yes, I do hold Bitcoin, and it is doing very well. And thanks, Ewan, for confirming you can see everything. So on to the next question. Fraser asked, what are my thoughts on the Life Strategy 100 accumulation fund? So just to reiterate what I said earlier, I'm not a financial advisor and I can't give financial advice, but my personal thoughts on the Vanguard Life Strategy 100% is it's a fantastic fund. I like the Vanguard Life Strategy funds, and without promoting a previous video too hard, I did actually make a video all about the Life Strategy funds, comparing all 5 of them against each other, so feel free to go and check that out if it helps. I do invest in the Vanguard Life Strategy 100 accumulation fund. I hold it in my SIPP, which is a self-invested personal pension. So I've made some notes. Some of the things I like about it is accumulating. So this means that any dividends that are paid are automatically reinvested, compared to an income fund where you may get income and it is sitting in your account as cash until we reinvest it. The other thing I do like about it, not so much the 100% one, but it's including the 100% one, it's a rebalance. It rebalances itself. So, say for example the 80%, it rebalances automatically to make sure you've always got 80% stocks and 80%. I've just lost 10 viewers, 80% stocks and 20% bonds. So it's a rebalancing fund. The only sort of negative, and the thing that I'm not so fussed about with the Life Strategy, not so fussed is the wrong word, but it is very heavily weighted in the UK. So what I mean by this is when we look at this sort of world market, the UK makes up a small percentage of this market. Whereas in the Life Strategy funds, if my memory serves me correctly, it makes up about 30 or 35%. So it's quite a large amount. And it's quite a home bias, I suppose the word is. Now, we've got to consider that a lot of our investments are already in the UK. You've got to think of your job is in the UK. Well, probably in the UK. Your property is potentially in the UK. So do you want to be so heavily invested still in the UK? And it depends what you think the UK is going to do over the next few years. You know, we look at the US over the last 10 years. How unreal has that been? Riding that sort of wave of the US, it's been doing incredibly. Who knows what the UK has got to come? So yeah, I hope I've answered your question. And thanks to the 2 of you so far for your questions. I really appreciate it. So over to the chat. Finance D. Very, very kind of you to log in, and thank you for saying that. Glenn, my preference is property investing. What is your preference, property or stocks? Okay, so right now, stocks. Reason being, I have been investing in property now for about 12 years, and I was starting to get quite a large portfolio in property, and I was getting a little bit worried that a lot of my eggs were in one basket with property, you know. So I love property. I do think property is expensive right now, especially in the areas I buy. And obviously that is a whole nother conversation and maybe something we can cover later today. I definitely think property still has legs. I really, really do believe that. But right now I'm trying to almost rebalance myself, you know, and I'm trying to not have such a heavy weight in property by introducing stocks and other investments. So at the moment, for me, it's stocks, but that doesn't mean I don't like property. I hope that answers your question, Glenn. And I know that you're a huge fan of property and you've got some really exciting things coming up yourself. So on to the next question that has been asked previously. It was asked by Emma, and she said, how much of our house renovation are we going to be doing? So for any of you that have watched my channel before, you'll know that I've shared a couple of refurb updates of our house. Really excited to be sharing that with you because it's quite a journey. We've been there today. I've probably got plaster or something all over me. We are going to be doing as much of the renovation as possible. To give you an idea about me, I've painted a flat once, which I documented on this. Apart from that, I haven't done a whole lot. So our skills are limited, no doubt about it, but we're definitely getting stuck in. YouTube has been a godsend, you know. We've learned so much about how to repair cracks and blown plaster and all this sort of stuff. So it's been a real source of education. I think YouTube's incredible and it's a platform I love and I share too. So I'll certainly be sharing it, and update 3 will be coming very soon. The next update, there's going to be quite big changes. There's a little teaser for you. So on to the next question. Question 4 was asked by Becky. So this one was actually commented on one of my videos, and I thought it was a really interesting question to answer. She said, this was on one of my Vanguard portfolio updates. She said, that's a great return, Gary, better than if you just deposit and leave it to compound. And even better that you deposit the money and leave it to compound over time. Very passive income. Agree completely. I've been wondering how you work out your percentage returns on a month by month basis, and also since inception, as this would be a great way to track my investments. So great question, and I thought I'd share it just in case anyone else was wondering. So I've made notes again how we can get there. So this is how you do it on Vanguard. When you're on the Vanguard website, you need to go to My Accounts. Then you need to click Investments on the left tab. Then you need to click Performance, which is in the top center of your screen. And then you need to click Investments again. So it's very confusing because there's investments over on the left, but then there's also investments down below what we've just clicked. So click Investments again, and then you'll see a date range at the top, and you can select what date range you want to use. So you can choose from inception, or you can choose a particular start date, which is obviously what I do when I do my portfolio updates. So moving over to the chat quickly. Richard, hi Gary, I was wondering if you could talk a little about investing in commercial properties. Richard, to be truly honest with you, mate, I can't. I've never looked into investing in commercial properties. However, I do understand there's a lot of benefits for doing so. So maybe I am going to make a note right now. Maybe that is a guest on a future chat. So I'm sorry I can't answer your question, but I don't want to fill you with lies and fill you with false information. I don't know about commercial properties, but thanks for asking a great question. So commercial properties, I've made a note for that, and I'll see if I can find someone that'd be happy to talk about it. Glenn, great stuff, Gary. Interesting to know. You're absolutely welcome, mate, and thanks again for logging in. So one more question in the chat. Aidan, what are the benefits of having a letting agent manage your property? I've got a property to rent out and a split in decision. So great question, and something I speak about all the time about how to manage our buy-to-lets. Personally, I manage mine myself. The benefits of using a letting agent are they know the market. They're the professional ultimately. You know, they do this day in, day out. They're probably renting hundreds of properties. They stay up to date with rules and regulations. They hopefully stay up to date with legislations and making sure that your tenant's treating your property nicely. And also the biggest benefit is you can take a back seat, you know. So you are renting a property can be like a business, you know, you need to put time into it. Whereas if you take that hands-off approach, like someone like Glenn and another guest on my show recently, Justin Wilkins, he has his properties managed as well. He can take that hands-off approach because he's about 4.5-5 hours away from his properties. So big advantages. There are big advantages of having them managed for you. However, I found that having my properties managed, maybe I was unlucky, but a lot of the agents were getting lazy. Inspections weren't being done. There was clear signs of smoking when my properties were non-smoking properties, and that hadn't been noticed yet. There was fag burns in the carpet, there was a smell, there was yellow walls, there was all sorts. So that did worry me. And then the final thing was, obviously I can save money from managing my own properties. I have 5 properties right now, and I save a large amount of money, I suppose, from managing myself. So it's definitely something to think about. I recently shared a video about whether or not to manage your own self, your buy-to-let. So maybe check that out. Maybe that'll be useful. I can't believe how much coming through in the chat. So thank you so much for getting involved. Richard, that's okay, Gary. Would be great to see a guest. Perfect. I'll see what I can do, mate. I'll see if I can find anyone that will be happy to speak about that and their experiences. Connor, what age did you make your first investment in stocks and property? Thank you for asking your question, mate. I really appreciate it. So I made my first investment in property. I think I was at 18, pushing 19. I invested in my very first property. I purchased that property for £74,000. Now this is close to London, so well, I say close to London, it's fairly close to London. It's definitely a commuter belt, and that property certainly wouldn't be worth £74,000 anymore. My first ever stock investment, I purchased a high dividend yield Vanguard ETF around 5 years ago through AJ Bell. And I've recently, in about a year and a half ago, I recently transferred my ETF, my ISAs and SIPP now to Vanguard. So I was with AJ Bell. I moved because the dealing charge was lower. Well, it's free at Vanguard actually if you do it monthly, and the platform fees were lower as well. So I hope that answers your question, mate. And keep firing the questions over in the chat. So I'm going to quickly fly on to the next question I've had from a commenter, from a user, sorry, before I go back over to the chat. This one's from Nigel. So this was actually on a video again of comparing ISAs to SIPPs. So like me, like you, I hold both for the same reasons as you. So going down to the question, I pay into them weekly as any forecast calculators I've used seem to say that I have a better chance of higher returns doing it weekly. I pay £250 a week into each account rather than £1,000 a month. Is that because of cost averaging? So, firstly, incredible that you're investing £1,000 a month. Amazing, mate. Secondly, I don't believe it probably is to do with cost averaging. The reason being, I forget the exact statistic, but supposedly I think the market goes up about 72% of the time. So arguably every time you're buying higher. So I would say this is more because your money is in the market longer working for you. So it's got more time, A, to grow, and B, to provide you dividend income. So that I would say it's more down to that rather than cost averaging or pound cost averaging, dollar cost averaging. Hope that explains the question. So yeah, what I mean, just to quickly go a bit deeper. So if, let's say, we put money in on the 1st of January and we didn't do it for another month until the 1st of February, after that payment goes in on the 1st, you've then got a whole month period of hopefully the market's going up where you're not getting more money in working for you. Whereas you put in your 250 in, that's then going up a bit more, going up. I hope I've explained that okay. And let me know if you have any more questions. So next question is another one from Emma. So I know you like index funds best, but any advice on how to pick individual shares, what sort of stats to look for, and how do you know when a company is undervalued? So, awesome question, Emma. And you are absolutely right that I'm a huge index fund fanboy. So I may not be the best person to speak about this, but I've made some notes for you. So the first thing you can do is you can use websites. So this is a website such as Simply Wall Street is one that comes to mind. The website is simplywall.st. You can sign up to a free account there and you can analyse up to 10 companies a month. Thank you to Trading with CJ for making me aware of this website. So that's one idea. That analyses various different things, and that is a skill in itself, you know. If analysing stocks was easy, there'd be millions of Warren Buffetts, right? So it's definitely a skill in itself. The second note I made is obviously research and understanding company ratios. Now, to be truly honest, this is something I don't specialise in and I don't spend a lot of my time in because I put so much of my time and money into index funds. And then the final thing that I would like to say to that question is investing in companies that you believe in. I know that sounds really cheesy, but if we're investing in this sort of hot penny stock and you know nothing about it, yes, you could do amazing, but it could also flop completely, you know. So, but Warren Buffett is famous of so many quotes of saying, oh, you should invest in something that you'd be happy to hold for 20 years or whatever. He compares stocks to buying a house, you know, you should really take time and choose carefully. So maybe it's about buying companies that you're happy with and you understand and you think have got potential to be around for a long time. Obviously, I'm no pro with this, so again, I'm not a financial advisor. So we're going to move back over to the chat for a couple of seconds. So Jonathan, if you were to start out again with a residential buy-to-let, where in the UK would you look to invest in? Awesome question. I really like that question. So I certainly wouldn't look in the areas around London right now. The market is inflated and expensive. I definitely think you'd overpay right now for a buy-to-let in the south. Not in the south, in the area I'm investing in, which is London Essex border. right now, I'd be looking in places like Liverpool, Manchester. Glenn actually did a video about this recently, and I think Middlesbrough was up there with it. Hull, places like that. So moving north of the UK, the yields can definitely improve. Some people even move into Scotland. The yields up north, from research I've done, places like Liverpool are boasting sort of 10% plus, which I think would be not quite so easy to achieve around London and the surrounding counties. So great question. I like that question. Nathan, is it worth renting a flat while living with parents? The main purpose would be to have them pay some of the mortgage off first property. I would have them live there for 3 to 4 years, I reckon. Awesome question, Nathan. And yes, I did exactly this. So I actually owned 5 properties before I moved out of my parents, so I definitely milked my mum and dad quite a bit to build my property portfolio, albeit a small portfolio. The idea being that you're right, living with parents is very cheap. I paid a tiny amount of rent to my mum and dad. Just basically, I'm sure I was eating more than what they charged me, you know. It was just a tiny bit towards the bills. I feel awful looking back now. But this allowed me to heavily save and heavily invest. Luckily, I never got hit with a big spending bug or any expensive hobbies. So a lot of the money I earn, I push straight into property, you know. So yes, without doubt. You know, maybe I know a lot of investors go on interest only. Maybe the option is either overpaying your interest only mortgage or using a repayment mortgage. You know, so over time they're actually chipping away at your mortgage balance. You know, and hopefully in that time the property value will increase as well. So awesome question. So, on to the next one. Jamie Crow, Magic Formula Investing. Do you think it works better starting as a starting point to find stocks rather than choosing them at random from a list? I seem to get good results from using the list and research. Jamie, I definitely think that time and effort would increase my Magic Formula returns. I have actually got a question from a user in a minute about the Magic Formula, explaining about it, so I won't go into too much more detail if you guys don't know what it is. But yes, I do. I think if I understood how to analyse stocks better, I could certainly get better results from the list that the Magic Formula screener provide me. I think the truthful answer is, without giving you any BS, is I'm just not skilled enough in buying individual stocks and understanding ratios. It's certainly something that I want to learn, without doubt, but at the moment my time is I am actually quite busy, even though I'm not working because of COVID. I'm actually busy with building a YouTube. But yeah, really great point, and I do think that you could do better returns by studying the stocks. Connor, do you have any favourite investors, anyone that inspires you or you take great deal of information from? So I'm sorry for my cliche answer, but it's got to be Warren Buffett, the man himself. You know, how he's consistently done over the last however many years is just truly inspiring, you know. And I believe in his ethos of long-term buy and hold investing. I think he has it right in that respect. I don't understand things well enough and to buy in and out and trade. And if it was that easy, as I said earlier, there'd be millions of Warren Buffetts, there'd be millions of millionaires from doing it. So maybe I'm missing something, but I think investing is a long-term strategy. It's something we work hard at. We build up our wealth over time. You know, it takes years and years and years and years, you know. So any of you guys chasing fire like me, you'll know that you don't have a fire. Well, it's unlikely you're going to have a fire number 3 years away, right? It's usually 20 years, 25 years, 30 years. It takes time and a lot of effort. So I'm going to move back on to the next user question for a second, but please keep the questions coming along. So Stacey asked, if you were starting from zero and starting your FI journey at this age, what would you focus on and do first? So epic question. I really enjoyed making notes for this one because it got me sort of really deeply thinking about things, you know. So again, I've made notes. First thing I would do is clear any high interest debt. So we're talking credit card debt, we're talking car loans, we're talking anything where the debt is eating away. I wouldn't be so worried about clearing a mortgage straight away, because I think mortgage is good debt in a certain point, especially while interest rates are so low. And I'd be working on reducing my costs, So I would be working on making sure I didn't have any silly spending, which I've definitely had before. So if there's memberships I'm not using anymore, if there's subscriptions I'm not using anymore. So I think reducing costs can be done fairly easily. It depends how frugal you're living when you find FI and you start the journey. Next up, I'd be building an emergency fund. I'm so sorry, it's not the most exciting plan, is it? But it's a vital point of the plan. I'd be building an emergency fund of 3 to 6 months of expenses. That's sort of the average, the market average, I was going to say, but it's not a market. That's what most people that speak about this online say, 3 to 6 months. I've heard emergency funds up to 2 or 3 years, so it's what makes you comfortable. My emergency fund last year, we're 2021 now. My emergency fund last year saved me big time. I'm a wedding photographer, and before we went into lockdown, I had 70 weddings last year. I think I ended up shooting about 8. If I didn't have that emergency fund, I would have been screwed, excuse my French. So definitely building an emergency fund. Now, some creators actually say emergency funds should come before paying off debt. So decide what way you want to do that. Next up, I'd be looking at, once I've sort of got my sort of debt under control, my costs down, my emergency fund, I'd definitely be starting to think about maybe investing and saving. So depending what you're saving for, short-term goals, maybe we're looking at more sort of standard savings, like savings accounts, bonds, etc. And when I say bonds, I mean premium bonds, etc. And then thinking about investing, so starting to think about investing in the stock market, investing in property, things like that, and then consider paying off your mortgage early. This is a big argument. This is a big sort of talk whether or not we should pay off our mortgage or invest, and it's personal preference. I've spoken about it before. Katie and I have got a different opinion on this. Katie is very keen to get the mortgage paid down on our new house, and I'm very keen to not pay it off, pay as small amount as possible and invest heavier. And that is an argument Katie's won, because it's what makes her comfortable. It's what's going to help her sleep at night, knowing that we're chipping away at our mortgage. And I can't argue with that. There's much worse things that I could be spending money on. So yeah, without doubt, they're things I'd think about when starting my FI journey. And this question was actually asked today by another user, so I didn't add it again because obviously it's already been asked. But thanks for a great question, Stacey. So next up, Joe asked, can I explain in a bit more detail the magic formula of investing in stocks and shares, please? So this is further to Jamie's question just a second ago. So magic formula is from a book called The Little Book That Still Beats the Market by Joel Greenblatt. So this book, he's a hedge fund manager, a successful hedge fund manager. And this book, he talks about, he's got a stock screener that beats index funds. Now, I was a index fund fanboy, like I admitted earlier. So this perked my ears up, So I read this book 2 or 3 times actually, and basically his stock screener is looking for 2 key metrics or 2 key ratios, whatever you want to call them. He's looking for companies that have a low price to earnings ratio, and secondly he's looking for companies that have a high return on capital. So this screener throws out these stocks that it believes are good investments due to having these particular ratios and circumstances. Circumstances is the wrong word, but you know what I mean. So the idea is you buy these stocks. Once you've bought a stock, you hold on to it for 12 months. It's really, that bit is part of the sort of rules, so to speak. You have to hold it for 12 months. After 12 months, you have to sell it unless it still appears in this stock screener of being a good stock to invest in. Then you can decide to hold on to it for another 12 months. He recommends you use this rule for 3 to 5 years, and it should outperform the market. Now, I am about 6 months in so far. Last time I checked, I'm about 19% up using this formula. So if you'd like to find out more information, I share a monthly update about my magic formula investing, serious on the channel. So make sure to check that out if you're interested. I invest in 2 stocks every month, £100 into the 2 stocks, so £50 in each. And yeah, hopefully that gives you a little bit more information. It's play, it's fun. It's money I can afford to lose completely personally, and it's definitely more for content for my channel and for you guys rather than for anything else. Obviously I want to make money from it. I'm not just throwing £100 in the bin, without doubt, but it's definitely been done as well to create content for you guys. So thanks for an awesome question, Joe. So moving back to the chat, so Glenn said absolutely North and Midlands for where to buy properties. Jonathan, thank you very much. You're welcome, mate. Thank you for logging in. I feel grateful. Connor, do you feel like lockdown has been a blessing in disguise, allowing you to focus more on YouTube? Without a shadow of a doubt, mate. I've dreamt of having a YouTube channel for probably 10 years, and I never knew what to speak about. The obvious answer would be photography, right? It's what I do every day. But as much as I love my job, I didn't feel passionate to teach it. I'm not saying I'm teaching now, sorry, that sounds arrogant, but I didn't feel passionate to share it and push photography on everyone. You know, photography is personal. Some people love it, some people hate it. Whereas I've got a real passion for finance. So some people have awesome hobbies like skydiving. My hobby, imagine if I ever become single again, my Tinder profile will say, oh, my hobbies are personal finance, you know. So I'm a real catch and Katie's a lucky girl. So yeah, without doubt, it's allowed me to really concentrate on my YouTube channel, which has just blown my mind how quick. 8 months, 1,500 subscribers almost. It's just incredible. I can't believe I have you guys logging in week after week after week, appreciating the content, commenting on the content, and I love the fact that I'm starting to build a little bit of a community, and like I look forward to hearing from you guys. I look forward to sharing with you guys. So yeah, it's definitely been a blessing. And Connor, you're welcome for all the answers, mate. Keep the questions coming. I'll happily chat. In case you can't notice, I love chatting. Trading with CJ, what's up, my man? You got a mention earlier in the stream, mate. You should have been here then. So, but bless you. Trading with CJ, he was the one that recommended Simply Wall Street. Please go and check out his channel once you finish watching the stream, of course. Richard, if you had a decent sum of money, 100k or so, and were thinking of investing in property, how would you spread it? E.g., would you put a deposit down on multiple smaller buy-to-lets or 1 or 2 bigger ones? Great question, mate. I think it would depend on my overall goal. I think it would depend if 1 or 2 properties gave me enough income to give me the financial security or financial income that I needed, then I'd probably do that, because then I'm mortgage. Now, well, if I was mortgage free, it would be maximizing my profit each month. Most property investors would say, obviously, that's the worst thing you can do, because you could maximize profit by buying more properties. So I think it will depend on your personal circumstance. I think the obvious answer would be probably to buy 4 or 5 properties, whatever you can afford, with multiple different properties on an interest only, and then hopefully the markets go up and you can leverage out the property. But I would say it depends on your circumstances. So I'm sorry for giving such an on-the-fence answer. But answering it without giving too much of an on-the-fence answer, what would I do? I think I'd buy multiple. I'm surprised by that answer, because I'm surprised I want to create so much extra work, but I think I'd buy multiple. I think I'd put deposits down on multiple and buy more. But thanks for your question, mate. I hope I've answered it without sitting on the fence too much. Next question from my users. Stephen asked, Gary, great video. I've got both. This is regards to my stocks and ISAs v SIPP video, but can I open as many SIPPs as I want? So again, this is not financial advice, but to the best of my understanding and knowledge, you can open as many SIPPs as you want, but please do check that and maybe speak to a financial advisor. But to my understanding, yes, you can open as many SIPPs as you wish. It's not like an ISA where you can open 1 per tax year. So next up, we're going to move on to the next question. So the next question is from Tom. Why do all financial YouTubers upload their videos at the same time on a Thursday? Literally everyone I follow uploads at the same time. Great question, mate. This is because we have something behind the scenes called our YouTube studio. And our YouTube studio gives us the algorithms and the best times to post. So you'll probably find that all of your favorite content creators are given the same time as the best time to post, if that makes sense. So we literally have a heat map on our back end, which tells us when we can reach you guys at the best possible time. So for me, it's Thursday at 6 o'clock and Sunday at about 5 or 6 o'clock too. So yeah, that is why often YouTubers post all at the same time, because they post and they want to reach you when most of their viewers are on YouTube. But thank you for the answer. We're actually on to the final user question. So if you have any more questions, please fire them in the chat box. Otherwise, unfortunately and very sadly, the stream will be coming to an end. So yeah, please do fire more comments if you want to know anything else. I've got all the time in the world. But if not, thanks again for logging in. So final question was, what is your strategy on buying below market value? I presume that's what you mean by BMV, and I presume you mean for property. So I've made notes again. Guess what? The first thing I wanted to say is this is not easy because, for example, properties that go through agents, these agents will have a little black book, so to speak, in their drawer with developers, with portfolio landlords, that they can ring with a good deal and say, do you want this? And it'll be bought that day, pretty much. So it's definitely not an easy thing to achieve. You've got to think, once it's on Rightmove, it's probably already been offered to many people. Some ways that I thought are ways that you could buy below market value. One way, around my area, there's a lady that has signs up everywhere. Call my number for a cheap property. Property bought instantly. Call this number. So that's a way. You could advertise locally, and you may get a desperate seller that rings this number. Secondly, it is very important to understand what its value is to know if you're buying below market value. So do plenty of research. There's plenty of ways of researching. You can look at previously sold in the areas. You can do comparables. You can speak to agents. So make sure you do understand its value to know if you're buying below market value or not. Do negotiate. Going back to talking about Justin Wilkins, who's been a previous guest on my channel, he recently shared a vlog where I think he made about 20 offers, didn't he? Was it 20 offers? I can't remember. He saw 20 properties and he made 7 offers, and not one got accepted or even negotiated. So it's important to keep the offers going in. Don't get your heart set on one property and push too much for that one property, So yeah, negotiate, keep offering. If you could buy cash, arguably that could give you some benefit, because depending if the seller is in a rush, you might have the advantage that you're ready to go. I think buy-to-let investors have that advantage compared to someone buying as a residential that may be in a long chain. You could consider auctions. I think there is the chance of buying below market value, but this is not necessarily the case. And sometimes I've seen things go at auctions for well over market value, in my opinion. And then the final thing is if you can manage to approach sellers directly or purchase things like repossessions. But obviously all of these things are difficult. And obviously, as I'm sure you've seen on YouTube, property investing is a hot topic, and there are thousands, if not hundreds of thousands of people, well, without doubt there's hundreds of thousands of people investing in property. So it's not easy. But hopefully those few tips helped a little bit. So thank you for your awesome questions. So we're going to move back over to the chat. We're going to see if we've got any more questions at all. And if not, unfortunately, it's time over. What have we got? So, Richard, great. Thank you for answering, Garrett. You're welcome. And thank you again for logging in. Eslo, official, how would you be able to enter a house and able to identify issues such as damp and more obscure ones in a viewing? Awesome question, mate. And it's probably through experience, and it's not easy, and that you will miss things. There's no doubt about it. But yeah, really, it comes with experience. Maybe if you have got a friend or a family member that is a tradesperson, obviously they're a vital person you could take along with you. I'd say that is one important thing. If you have someone more knowledgeable than you that you can bring along, I think as you viewed more and more properties, you'll understand the telltale signs of things. I think main things to look for: check the condition of things that could be expensive to replace. So check conditions of things like your fuse boards, your windows. They're just a few suggestions. I'm sure there's millions more, but they're the things that are going to be very expensive to replace if you need to, So look at the condition, look at the age of the sort of the wiring in the property, maybe things like damp and stuff. Personally, it used to put me off. Rightly or wrongly, it used to put me off quite a bit when properties had big problems. But for other investors, this is like green light for them, because they know that it's going to put people off like me, who may be a bit of a wimp. So great question. I think it comes with experience. If you've got a friend or a tradesperson you can take with you, I think that's going to really help. And apart from that, I think you're going to probably, that's the wrong word, but you may make mistakes and learn from those mistakes. The fact that you're investing in property and you're getting on with it and you're doing something is incredible. So I hope that answers your question, mate. Peter, hello, mate. With buying a first property, do you think it's better to jump in and buy somewhere when you have a deposit, or keep waiting until you have a bit more cash behind you? Awesome question, Peter. Thank you. So I would say it depends on your situation. So I'm not sure if you were in the stream earlier, but we were talking about the journey towards FI and some of the principles. So I'd go back to that. Like, what is your situation? Have you got an emergency fund? Are you sort of financially secure? If you've got an emergency fund, you've got a secure job, or at least at the moment you hope you've got a secure job, and you've got sort of plan Bs should anything like this COVID happen again, then I don't see any reason to wait. But it depends on your long-term goal. Obviously, we don't know if we're at the point of the market where prices are the lowest they're ever going to be again, or if the property market is about to drop. So it's very difficult. It's very similar to stocks, isn't it? But yeah, I'd say it comes down to your personal situation. And if you're in a comfortable place, that once that money's invested, you've got to understand it may be locked away for a while, So I hope that answers your question. And good luck as well if you're getting into investing. Awesome that you're getting involved. So Glenn Russell said, I can help with the commercial question in the video at some point, Gary, if you want me on again. I suppose I can have you on again, mate, if I must. No, that'd be awesome, Glenn. So yeah, we'll sort that. Next question, Yuli, I apologise. You've been supporting my channel and we've been watching each other's channels for a long time. I hope that's how I pronounce your name. But thank you for your comment. Would you buy a property in London? Right now, no, I would not, especially if we're talking an investment property. I think prices are very high, I think with everything going on right now, with people starting to work virtually, I think a lot of people are potentially moving out of London. Sorry, I lost my words for a second then. I think people are potentially moving out of London, and now they can work from home. It's no longer essential for them to be living in such an expensive place, so they are moving to different places around the UK. But I presume your winky face in your question, it was a bit more of a rhetorical question. I think that's the right word. So Wendy Wolfman, is there a stock that you think is great to get at the moment? So thank you very much for your question. I actually spoke about this earlier, and I wouldn't say I'm the best person to give advice on buying individual stocks, because it's not something I really put time to and understand. Trading with CJ is actually on my channel right now. Please finish watching the stream first, but do check his channel out. He does almost daily stock analysis right now on various stocks. Stocks that I personally like right this second. I've and this one I actually got through CJ, but was Tattoo Chef. I think the vegan market has big potential right now. I also invest in your obvious technology companies, so your Facebook, your Netflix, your Amazon. I think they're doing incredible right now, and they are sort of creating a lot of profit right now with the situation, which is obviously sad for everyone suffering from it, but they are really sort of, what's the word, they're benefiting almost from it, because people are spending so much time at home and on technology. And then the other thing is to consider companies, good solid companies that are maybe not hitting sales figures that they usually would. So maybe, I don't know, I again, not financial advice, but what about people like the Coca-Colas, those sort of people that are usually selling to hotels and restaurants and all these various things, which pubs and bars, obviously we've got travel stocks, so people get talk about Carnival Cruises, they talk about EasyJet, I think there's loads to consider. And I apologise that I can't give more in-depth analysis like some YouTubers do, but I don't want to lie to you, and I don't want to pretend like it's my sort of forte, because it's not. But hope that answers your question a little bit. Trading with CJ. Are you Essex based? If so, the best place to live in Essex in terms to value and location. So yes, I am Essex based. I would say the best place in terms of value and location, and I'm probably going to get shot down for this, is potentially Colchester. Possibly. Colchester is within an hour or so from London. It is cheaper value compared to some places in Essex. It is a historic town. It's quite a beautiful town. There are parts of Colchester that are not quite so nice, but there is beautiful parts of it too. So I definitely think that Colchester, I would answer to that question. I know I've got some other Essex watchers in here, so they're probably screaming at the screen, and my streamers have suddenly sort of dropped off the edge of the whatever you call it. So Glenn, Gary, just want to say a fantastic live, mate. Really great questions from your viewers, and you nailed it. That's really, really kind of you, mate. I've really enjoyed it, actually, and I'm chuffed that I honestly, I was saying to Katie before I started, I'd be lucky if I got 10 people on, and I think the highest I've seen it at is 14, so I'm over the moon with that. I'm over the moon that people gave me questions before, and I'm over the moon that you guys are getting involved now. Please fire away more questions if you've got anything else. Jonathan, what are some of the main things you look for in a buy-to-let? House size, condition? Thanks. You're welcome. No problem at all. So, main things I look for. I think about the area. I think about the sort of tenant it's going to attract. So if I'm buying a property that is going to be for a family, then you definitely want to consider the area it's in and whether or not a family is going to want to live there. So you're going to want to think about local schools. You're going to want to think about that's the main thing for families. The other things I do think about parking, especially in busy areas. I think parking is a big thing. So many people drive these days. I do consider about being close to train stations and network links, and that is something I do actually base my investing on. With regards to the property itself, as I mentioned previously, I'm probably a bit more of a safer investor. So some investors walk into these places that to me look like they need to be bulldozed, but they sort of think, great, there's value in this, which I understand completely. But definitely before I started my refurb journey, I didn't have the knowledge of how to do this work, so you may well consider things that need work, and you can add your value into it depending on your skill set or whether or not you've got good tradespeople you work with. What else do I think about? I definitely, again, going back to families, if I'm considering a property for a family, it's very important it's got the potential to have a bath in it. Obviously, families with young children are going to probably require baths. So there are a few things I consider. I'm sure there's loads more to consider, and there's loads more I'll think of throughout this stream, but I don't want to sit here umming and erring, because I know you guys are giving up your time for me. So I hope that gives you a few ideas, mate, and thanks again for your comment. So Eslo, what are the best ways to research the type of property in the area, whether rental demand is high, and type of property to purchase, such as an HMO demand? Awesome question, mate. Really awesome question. So the best way to research right now, I would definitely say get involved with communities. There are so many amazing, giving people out there that have created awesome communities. One of the communities that I get involved in is called UK Landlords. It's a Facebook group, and there is so much help and advice on there. Other places to start researching the property itself. Rightmove is an obvious answer. You can include sold or previously let properties, so you can have good comparables to other properties. You can see rental demands. You can see how quickly properties go up. You can set alerts, so I have alerts for certain locations that I look at. So maybe you can follow how long a property is on the market for. You could speak to agents and talk to them about different properties and what they suggest. Obviously, you're relying on the agent wanting to give up their time for you, but if they know that you're a potential property investor, then you're definitely going to be the sort of person that they want to befriend. So yeah, I hope that gives you a few options of research to do. So Peter, thanks mate, you're welcome. Thanks again for getting involved. Trading with C-Day. Tattoo chef to the moon. I knew you'd say that, and thank you for all your awesome videos, mate. You've done incredible work, man. Jamie, thoughts on buying one world index fund rather than several different indexes? Started buying separate ones to start with, but found almost everything I was buying was covered by the FTSE All World Index. I agree completely. There is a lot of people that argue that technically, if you want to have a portfolio of 100% stocks, you could just buy a world fund, and I can't argue with that. I know in my portfolio I hold lots of other funds. Well, lots of other funds. I think I hold 5 or 6. You don't need to do that, and you're completely right. You don't need to do that, and you could. I know Barney Whiter of the Escape Artist. He writes an awesome blog. He recommends buying one world fund, so it's definitely my favorite book of all time. If any of you guys can see the description box, The Simple Path to Wealth, J.L. Collins, he recommends buying VTSAX, which is the American market, isn't it? It's the I forget what they call it now. It'll come to me in a second. So yeah, you could do that. The couple of the funds that I invest more money into, I've put a little bit more into emerging markets because I think some of the countries in the emerging markets have potential of doing incredibly. Obviously, I could be wrong, but I think some of them have got potential to become big, powerful countries. I put a little bit more into the US because, let's face it, the US has been doing incredible. And they've been on this run for the last 10 years or so that is just outstanding, and it's smashing things to pieces. And I'd now put in a little bit more in an ESG fund, which is a socially responsible fund. This was after a sort of investing chat that I was part of, and they were recommending ESG. They were talking about ESG, and it just ticked a lot of my boxes, thinking about what we're investing in, rather than just investing in any old thing that you don't know what they're sort of promoting and doing. I like the fact that it's making me sort of more socially aware. The argument is, what Vanguard calls a socially responsible fund, you may not, So that is an argument. You may not agree that the funds are socially responsible. So make sure you do your own research. You look at what companies are in with that fund. So yeah, thanks for a great question, Jamie. And I'm sorry I've gone off on a bit of a tangent, mate, but I'm glad that you agree. Trading with CJ, thank God you didn't say Dagenham. Dagenham's not that bad, mate. It's not that bad. DIY Katie, I've seen 20. That is incredible. I didn't think I'd hit 20. That's double my goal. So my goal was 10. I got 20 streamers. That's incredible. I'm back up to 17 now. So guys, any of you that have joined, fire away your questions. We're talking about investing, property, financial independence. We're talking about if you want to know anything about me. I'll try my best to answer it. Keep the questions coming. Richard, what sort of tenants would you normally look for in buy-to-lets? Families, students, working professionals, etc. So I think I previously touched on the fact that I purchase properties near train stations. I think I mentioned that. So working professionals are definitely a positive for my properties and the sort of properties I own. Reason being is because my properties are under an hour from London, from central London. So I definitely look for working professionals. I definitely consider young couples. To be honest, I don't really exclude much. This is where I may get some dislikes but to be truthfully honest, I do get a bit more wary when it comes to particular things like DSS and stuff, just because I have had such horror stories about it, and I feel awful admitting that, but I'm here to be honest with you guys. And I know there's probably incredible people that just need a helping hand, but I've got to be honest with you, it has worried me a bit because I've heard stories. I remember one story. The guy was taking some of the money of his DSS and not paying his land or so. I think it's all been cleared up a lot in time, and now I believe you can even have the sort of council pay you directly. So it's definitely something I need to consider more, because it would be awesome to be able to help people out. that are struggling. So I hope I haven't made you guys think I'm an awful person by saying that, but I'm here to be honest with you guys. So Richard, thanks for a great comment, mate. But yeah, they're the main people I look for right now, and definitely working professionals are probably the main my main customer, so to speak, because of the type and the location of my properties. So yeah, right now I am up to date with my comments. I know that my live stream that I'm watching on my phone is slightly delayed to the real live stream, so I will hang on for a little while just in case any more questions come in. I can see there's still 14 of you right now watching, so if you have any final questions that you want to ask me, please fire away. Don't feel like you're asking too many questions. You don't understand how grateful I am that you guys are even bothering to give your time to me. I really greatly appreciate it. So please do fire away any more questions. So Paul's just come in. What's your view on buying a property versus leaving money in an index fund? Paul, awesome question, mate. Apologies to people that have been on since earlier, because we have touched this, but which is not a problem at all. But right now, I'm swaying towards investing in index funds. The areas that I invest in right now are overvalued. I don't believe the rental yields are available that I would like to be achieving. Excuse me. And I do like what's the correct word? The sort of, I can't think of the correct word, but the sit back approach. If anyone knows what I'm talking about, put it in the comments. I do like the sort of hands-off approach of index funds. There's no doubt about it. You put your money in, you leave it to work. Property comes with a time commitment. It comes with a financial commitment if you need works done, etc. But don't get me wrong, there is a potential to make a lot of money in property, and we were talking about it earlier. You can leverage money out of property too. But right now for me, I've got 5 rental properties, and I was worried that I was becoming very heavily invested in property and not much investment in anything else. So I've definitely moved into index funds for that reason mostly. If I wasn't so heavily invested in property, I probably would have carried on that way, because it was almost what I knew. I've invested in property since I was 18 years old. I'm 31 now. So I probably have continued down that line. But I was a little worried that I was starting to get all of my money in property and no money elsewhere. So awesome question, mate. But yeah, I do like the sort of hands-off approach of index funds. I like the fact that you can put your money in the tax-efficient accounts like a SIPP and an ISA, which I spoke about in my last video. And those index funds are going to work for me over time and take a very hands-off approach. I said it again. However, don't get me wrong. I don't want to ever sound like I'm doubting property. Property has huge potential. I've done very well investing in property, and I know many, many people that have done very well investing in property, and done properly, it is a solid investment. But thanks for a great question, Paul. So again, I've caught up with all my comments. Does anyone else have any other questions? Jamie, yes, thanks, mate. Do you have any thoughts on shared ownership scheme? As a first-time buyer in Surrey, it appears to be my only option. I understand completely, mate. I really do. Honest answer, again, I can only be honest on this stream. I don't know a lot about it. My very limited understanding of it is it sounds like a great scheme, and it's a great way to get onto the market. Glenn has mentioned about coming onto our channel, about talking about commercial property. So maybe it's something we could speak to Glenn about. I don't know if Glenn knows much about shared ownership, but I could certainly make a note and speak to him about it. Let me quickly write that down. Shared ownership. I think it's a great question, but I don't know the answer to it. I know my understanding of it is some of the shared ownerships, you can actually then start buying some of that extra share, if that makes sense. But I don't know enough about it, unfortunately, mate. So I can't give you an honest or sort of correct answer, because I don't know. So apologies, but I understand how hard it is right now getting into the market. I think the market is very pricey, and Surrey is going to be an expensive place, isn't it? You're on that commuter belt like Essex, and I understand, man, and I'm sorry that it's so expensive. Like, I get it, I really do. So, Alison, do you invest in property as a company? Awesome question. Thank you for asking it. No. So probably, I can't say it's a mistake I've made, but looking back now, I wish I had of. I wish I'd put them into a limited company. When I first bought my first ever property, it wasn't a done thing to buy them in a company, or at least I wasn't aware of it being a done thing to buy them in a company. Now, if I ever started again, I would 1,000,000% be putting them in a limited company. If I was starting to buy more properties, that would be put straight into a limited company. And I wish mine were in a limited company, to be honest. But unfortunately, I started when it wasn't sort of the go-to thing. I think there was definitely large sort of portfolio landlords putting properties in companies, but it wasn't so big when I was. The problem now with me moving my properties from my personal name to a limited company, if I set one up, is, to the best of my understanding, and again, it's not financial advice, I believe I'd have to pay stamp duty and I'd almost have to sell it to my company. So you then have capital gains tax potentially as well. So it's a real complex thing. Now, I know there is professionals out there that can help you navigate this and help you reduce your liability. However, I haven't done anything. I have spoken to my accountant about doing it, and every time it's sort of like it could be done, but we're not sure. And it's one of my mistakes. I've actually made a slideshow presentation that I'm going to be doing all about buy-to-let, and I'm going to go through all my portfolio. I'm going to go through everything that I'm planning on doing a live stream on. So hopefully you guys might be interested in that. But one of my sort of things I did wrong, Paige, was probably not wrapping my companies in a limited company. Sorry, not wrapping my properties in a limited company. But thanks for an awesome question, Alison, and thanks for bringing up a subject that I should talk about more. CJ, thoughts on shared ownership? Yeah, same as Jamie's. Yeah, so we covered that. I'm sorry I don't know a whole lot about shared ownership, but I'm going to speak to Glenn, who is a mortgage broker. I'm going to see if he knows much about shared ownership. The plan is to get Glenn back on the channel, and we're going to be talking about the two things that have come up tonight about property that I'm not aware of, which is commercial properties and shared ownership. So if you'd like to see that, maybe leave some comment and support and love for Glenn. He was really helpful in his last interview with me. That can be seen on my channel. So again, I'm all caught up. I've got no more comments left in the channel, but I can see there's 16 of you still logged in. So if any of you would like to ask any more questions, for any of you that are just joining, I'm talking about financial independence. I'm talking about my FIRE journey. I'm talking about my buy-to-let properties and managing them myself. I'm talking about index funds. Whatever you want to ask me, fire away. But at the moment, I have no more questions to ask you. So, sorry, I have no more questions to answer. But while we're waiting to see if any more comments come in, I just want to say again, thank you so much for logging in. Thank you so much for supporting my channel. Thank you for all you amazing guys that are constantly commenting and taking your time to watch my videos. It really does mean a lot. I can't lie, hours go into the videos. I'm sure all you YouTubers that are watching know how many hours go into videos, and it is a time-consuming thing, but you guys reward me by giving me so much commitment and watch time and comments and gratitude, and I just can't thank you enough. Jonathan, would love to see some commercial property insight in a future video. That is coming, mate, without doubt. I'm going to speak to Glenn. I'm going to chat to him, and we're going to arrange the interview. So I wouldn't be surprised if it's coming in the next month. I think the video will be shared very soon. If you guys have anything else you want me to ask Glenn, either leave them in the stream now and I'll watch out and make notes, or comment somewhere. You can comment on the video afterwards. It'll be on my channel. Leave me a message on YouTube, a comment on YouTube, a message on Instagram, Facebook, all of the different platforms. I'm Free Your Finance. Facebook, Twitter, Instagram, all of them. Just search Free Your Finance. Jamie, recently heard about the innovative finance ISA. Did any of you see my video and see how much I struggled to say innovative finance ISA? I had to make about 10 cuts of that. I don't know if it noticed in my ISA versus SIPP video. But sorry, Jamie, back to your question. Used for peer-to-peer lending. Have you heard anything about it? Looking for diversification purposes? Yes. So it was introduced around 2 years ago, and it's exactly what you said. It's to hold peer-to-peer investments in. So I do peer-to-peer lending and peer-to-peer investing, but mine are not wrapped in an ISA. So my peer-to-peer funds and the money I earn, I have to pay tax on. which obviously my accountant sorts out for me, but I have to declare the interest that I earn. Whereas obviously you can wrap them in an ISA. Now, the company that I use for peer-to-peer lending, well, there's two companies. I use the House Crowd and I use Cufflink. They're the two that I use, and they both offer the ISA. So it's definitely something worth considering. You have got to consider it counts towards your ISA allowance. So obviously for cash ISAs, innovative finance ISAs and stocks and shares ISAs, the maximum you can put in is 20k per tax year, per financial year right now. Obviously this may change, but yeah, it's definitely something worth considering. I can highly vouch for the House Crowd and Cufflink. There are many more different websites that offer. For any of you, just a brief thing before I move on to the next question. For any of you that don't know about peer-to-peer lending, this is where you can basically lend your money to other people, other businesses, other property developers, and you will get paid an interest amount but for lending that money. The downsides are that money is certainly in some of the situations and the ones I invest in, that money is not guaranteed. You know, you could lose your money, and that is very clearly said on the websites, which is scary. You know, you could lose this money you're investing. And at one point, I did have quite a large sum of money on peer-to-peer lending, and it would worry me if I didn't. No, that's wrong. I invested money I could afford to lose, but I wouldn't want to lose. It was a lot of money on there still. I wouldn't want to lose it. But I diversified. I invested in many different investments on the peer-to-peer lending platforms, and I have consistently been paid out. Even through COVID, I've got to vouch for both Cufflink and the House Crowd. I've been consistently paid out. I can say that some of the investments have been returned late, but they do email you to warn you that the developer or whoever's borrowed the money is struggling for payment right now. Maybe they haven't, due to COVID, they haven't yet sold all the developments or something. But during the period that is late, you're still getting paid interest for. Now, some of the interest rates available are sort of 7 to 10% sometimes, so the interest rates can be good. So thanks for an awesome question, Jamie. So on to the next question. Emma, Emma, thank you for your two questions that I answered earlier. I don't know if you were on the stream earlier, but if you weren't, watch it back. It will be on my channel afterwards, and I answered your two questions. Have you considered a holiday home abroad? Yes, I have. I've definitely considered this. And I was actually, I don't know if you or I've ever spoken about this, but I actually was not close, but I was looking at a holiday home before I bought property number 2. And things that scared me was my lack of knowledge of buying abroad. It was potential tax implications. It was really the fear of going into the unknown and not knowing enough about the market. I probably have been brought up to be very safe in my investments after just speaking about Cufflink and the House Crowd where I can lose my money, so that doesn't really make sense. But I probably was brought up to be safe with my investments, and I was a little concerned that I didn't know enough about the market. I have friends in my financial sort of community that have recently got holiday let in Sardinia, and they are really happy with their decision. They do use the holiday let themselves, and while they're not using it, they're earning an additional income, and they're renting it out from through Airbnb. And they've been really happy with Airbnb. They've said that the system and how easy they make it for them has been awesome. So for any of you guys ever considering renting a property abroad, or even in the UK, Airbnb has been really recommended to me by my friends, and just the system and the way it works. So yes, I have considered a holiday home, but no, I haven't ever followed through with it. Pratik said, video on tax saving tips for property landlords will be appreciated. I am making a note on that right now, mate. Thank you very much for suggesting it. Tax saving tips on property. Okay, that's a great question, and I'll definitely try and find someone that I can speak to that are going to suggest some things that we can go through. Again, it wouldn't be financial advice, but they can definitely make suggestions and things we can think about. Maybe I can see if I can get an accountant on that is going to be happy to speak about that. Great suggestion, and I've made a note about that. Thanks for suggesting it. Emma, I've considered peer-to-peer lending, but it sounds a little risky for me personally. Yes, it definitely has a risk element, and the fact that over their website, on the homepage of their website, is plastered everywhere, you can lose your money it's scary, you know, there's no doubt about it. But then I think that's also what makes investing in the stock market scary, because we grow up hearing, oh, stock market is dangerous, you can lose your money in the stock market. But that's what we're trying to talk about, and this community I'm trying to grow with you guys, that's what I'm trying to talk about, the fact that the stock market doesn't have to be this scary place, you know. But Emma, I agree with you, peer-to-peer lending can be risky, and there is a chance that you could lose your money and not get your original investment back, which is a scary thing, you know. So I suppose the answer is, don't ever invest more than you can afford to lose completely. This should be once you've used your tax efficient accounts, once you've been paying into your pension, once you've got your emergency fund and you've got your debt cleared, you've got your mortgage paid, you've got your investments, you know, maybe it's something to consider then. Connor, quick one, what's 3 of your favourite books? Awesome question. So I know you've watched my channel a lot, so you may well have seen my my goals. I think it was my goal. Yeah, in my goals video, I said that I want to read more this year. So 3 favourite books, without doubt. Number 1, Simple Path to Wealth, J.L. Collins. You guys probably think I have an affiliate link with him because I recommend him so much. I don't get paid anything from J.L. Collins. I must say, however, in my description, if you check the description box, I do have an Amazon affiliate link. So if you buy the book through that link, it won't cost you a penny more, but I get like 3p or something, which just is a thank you to me and to support the channel, basically. I think I've earned about 50p from that so far, so it's nothing much. But J.L. Collins, Simple Path to Wealth. Next one. Next one is 4-Hour Work Week. I really enjoyed that book. It's not so much about financial independence. It's more about understanding what in your life gives you value and what in your life you spend too much time on. I think we're all guilty of this, you know. There's probably no doubt about it. When I'm editing my YouTube videos for you guys, I spend way too much time on silly little things, cutting out every single and that you guys probably wouldn't care about. But I've got this sort of view that I want my content to be going out as best as possible for you guys, because you guys are committing to me. So 4-Hour Work Week is all about this time that we waste on things that probably doesn't need to be wasted on. And in number 3, we have got. Sorry for the long pause, but I am thinking. I want to give you a good answer. Number 3, we've got. It was, I'm trying to find it on my Audible quickly while you guys are all logged in. It was by Christy and Bryce Shen. Do any of you know them and can tell me what the book is called? They're 2 Canadians that retired at 31 years old. Quit Like a Millionaire. Number 3 is Quit Like a Millionaire. So Christy and Bryce Shen are a Canadian couple that retired at 31 years old, and they are now travelling the world. And it just sounds incredible what they do and what they talk about. And Christy especially talks about her fears of retiring early and the fears of the FIRE movement, you know, because it all sounds so simple. And she went through a big crash and she was like, crap, have we got this right? You know, have we made the correct decisions? Is our portfolio going to pay us? And I think she's actually said that since they've retired, they've ended up with more money than they started with. So it definitely proves that it can work, you know, and done properly, it can work. Life Redefined, Evening All, thank you for connecting. Thank you very much for connecting. Unfortunately, I think we're finishing up. Unless anyone else has any more questions, please, again, leave them in the comments box. I'm happy to answer them. But unfortunately, I think you're just checking in as people are checking out. But if anyone has any questions about buy-to-let property, investing, financial freedom, financial independence, whatever, fire them away. Connor, thanks for a great stream, and I hope everyone has a fantastic week ahead. Connor, thank you for all the support you give to my channel. You're always there commenting on my videos, just like many of you guys tonight are, and I really appreciate it, mate. I really, really, really do appreciate it. It's nice to know that you guys are committing to the channel and you're giving me so much support. It means a lot, and I know I've said that a lot today, and I probably sound a bit desperate, but it really does mean a lot. So I'm just hanging on to see if anyone else has got any more comments or questions or anything, and if not, I'll be calling it a day. So please do fire your questions. Just one more time, just reminding you if any of you want to suggest things that you would like me to cover in a later video or a later stream, do leave them in the comments box. Do connect with me on the various social media platforms like Facebook, Instagram, Twitter. I'm at Free Your Finance for all of them. I do actually have a Facebook group which I plan to turn into a community, and I want to get like-minded people on the path towards financial independence that want to just be friendly, that want to make a nice friendly community where we talk about financial independence and we don't feel embarrassed or shy to talk about finance. You know, it's really important to me to create this community where we can feel comfortable to talk about these things. It's such a thing that we're all scared of talking about, yet it shouldn't be, you know. Like we need to get our finances in shape, and we're all working together and we're all doing amazing things together, and I want to create a community. So search Facebook. My Facebook group is Free Your Finance Community, and then I have a Facebook page, Free Your Finance. So no more questions or comments have come in, so unless any comments come in the next 10 seconds, I think I'm pretty much done. So has anyone else got anything else they would like to ask me before I call it a night? And again, while I'm waiting for a few more seconds, thank you so much for coming in tonight. Katie said earlier we had 20 people in tonight at one point, which is epic. I really did believe I'd be lucky to hit 10. So to double my goal is just incredible. So I think that is going to be a night over. It's been an incredible first stream. I cannot believe how successful that was. Jamie, great stream, mate. Thanks for your time. I'd love to join the community. I'd love you to join it, mate. So the community is on my Facebook group, Free Your Finance. If you request, I ask a few sort of member questions just to make sure you're a real person, and that way we don't get any bots or any spam or anything that's going to cause any sort of... At the moment, I warn you, the community is only small because I've only just started it, but the plan is to build it with your help. We're going to share it, and we're going to get loads of like-minded people that are going to talk about finance, and it'd be a cool subject to talk about, you know. Just to let you know, the plan is to make more streams. I'm planning on one day, the big aim, what I'd love to do is to stream weekly to you guys and chat with you every single week. At the moment, I don't think I'm there. To be honest, I don't think I have enough of a following of you guys that want to hear from me every single week. I think I'd be on my own here talking to the wall all night. But the aim is one day to stream every week with you guys. I'd love to chat at least monthly anyway. To do a monthly chat with you guys would be epic. I've really enjoyed joining. So Life Redefined, I will watch back from the beginning. Sorry I'm late. Please don't be silly. I really appreciate you giving up your time and logging in at all. The stream will be available afterwards on the channel, so you can go back and watch it afterwards. Is it a private group? Yes, it is a private group. So you can request membership on the Facebook group. Again, there's a couple of membership questions, but you'll get accepted. You're a human being. I'm just trying to avoid any spams or bots or anything like that. So again, I think I'm probably saying goodbye for the 10th time. I'm sorry I've probably given you all a headache. I just want to say thank you so much. We're 1 hour and 19 minutes in. Thank you so much for logging in tonight. I've really enjoyed it. I can't believe how nervous I was beforehand, and straight away my nerves went. I've loved answering your questions. Thank you for all logging on, and I'll see you on the stream very soon. All right, take care, guys, and I'll see you on a video soon.